So I'd like to welcome everyone to our webinar this morning. So we are age-wise. This is number one of our home modification series. We are very grateful to the Division of Housing, the Department of Local Affairs, for hosting this for us, and to Premier Credit Union for allowing us or helping us to sponsor this. And this is where you can find us, agewisecolorado.org. And with that, I am going to stop sharing my screen. And excuse me 1 minute. And turn this over to Brian Ralph, is with the Division of Housing and heading up this whole 3-part series. Again, thank you, Brian, and welcome. I'll say it one more time since we've added some more people. Please put the community you live in the chat box as well, and any questions. Thank you. Brian, take it from here.
Okay, all right. Good morning, everyone. I'm Brian Ralph. So the Colorado Department of Local Affairs, Division of Housing, and I am on the home modification team. So one part of what I do on the home modification team is our home modification tax credit program. I've been overseeing it for about 1.5 years now, and I think the impetus for this webinar series has just been, I think over that 1.5 years, I've seen quite a bit of confusion. People don't really know where to look, what to do if they really need their home modified. That's kind of where this comes from as far as like the basis of this webinar. So just to note, we have 2 more webinars coming up, one on the 25th with my colleague, Kim Branting. If she's on, if you want to pop on and say hello, you can do that. So she's presenting on considerations when planning a home modification project from an occupational therapist perspective. So then our third webinar will conclude on October 9th, where my colleagues Naomi Huber and Mickey Forsyth will be providing guidance on the contracting phase of a home mod project. So I strongly encourage you to attend these webinars, and it's our hope that the information we provide will help ensure a successful project for you. So yeah, Kim, Naomi, Mickey, if you guys are on, if you want to say hello, you can.
Hi, I'm Kim Branting. I work with the Division of Housing, and I will be giving the presentation in 2 weeks on September 25th.
All right, thanks, Kim. I don't know if Naomi or Mickey are here. But, all right. So the agenda for today. So the main focus of this is going to be the concept of aging in place and kind of the intersection of home modification and how that impacts aging in place, and maybe some funding options for you to really make that happen for you to support your needs as you remain living or even your whole life. So from there, yeah, I'm financing a home modification. And then, as I mentioned, I oversee the state's home modification tax credit program. So I'll give you some information on that, just an overview. And then we'll conclude it on some subsidized resources that are available in the state. It's not an exhaustive list, but I try to kind of give what's comprehensive, what's most available in the state, just as a good starting point for you. So, and that's actually another reason why we're looking for information on where you're located, just because I want to know who's reaching out to us, who's looking for support, and see if do we have resources for you to make things happen for you. So please, yeah, that would be very much appreciated if you can give us just some information on where you live. So, all right, so aging in place or living in place. So aging in place, living in place, they're very similar. I think living in place is a bigger umbrella term, and that really encompasses like taking steps to remain living in a community setting through careful planning and adapting to meet your needs. So yeah, I mean, we're here to talk about aging in place and the things you can do to remain where you want to live for as long as possible. But I mean, it really applies to everyone. So just want to note that this really applies to your loved ones, regardless if they have a disability or not. I mean, there are a lot of things that we can do that we need to think about to remain living where we are, because we all have challenges. So yeah, so I mean, so as far as like aging in place, I mean, we think about, study after study, it's linked to happiness, and social connectedness is linked to your life expectancy. These things are important at any age, so as we progress through life, they do become more and more important. And you want to think about it as there's 3 like psychological determinants of happiness. So it's like, where are you living, what are you doing, and who are you with? I mean, 3 out of 3 is ideal, but 2 out of 3 really isn't that bad. So And I think these are the three factors that really impact living in place and how you want to frame planning for your life for for the years ahead of you. So yeah, so the main factors impacting aging in place, our advancing healthcare system. I mean, you think about healthcare, and we have 20 million people are receiving healthcare through the ACA today. I mean that's huge. So you're thinking about people are getting better care to make sure their needs are met in their life. We have treatments for terminal illnesses that 50 years ago we never had. So people are living long, healthy lives, even if they've had challenges just to get over some illnesses. And even talking about mental health treatment, that's actually significantly linked to life expectancy as well. So I think our advancing healthcare system has really helped people remain in their communities and live a long, happy life. So other factors, social and family connections. Think about like our national migratory patterns. People are staying where they've always lived these days. It's the past 2 decades, there's been this shift where people aren't really migrating as much. And also you think about, the extended family living together. These are also stats that demonstrate that Americans are staying closer to their families. So you think about social media, social networking, it's tied to what's called social capital, which is, how do you bridge your connections with people? How do you form bonds with people? These are things that had never existed until probably 25, 30 years ago. So, um, you know, so yeah, so then technological advancement as well. You think about, mobility devices, assistive devices. People are able to be in the community and get around in the community. You think about there's wheelchairs that can go up and down stairs these days. People can live a lot more independently just through technological advances. So things like augmentative communication. People that have never been able to communicate can now communicate in the community. So yeah, and then universal design. So universal design, that's a big part of living in place too. And that's defined as planning to build a physical learning and work environments usable by a wide range of people. So homes are being built more accessibly these days. There's accessibility laws for commercial environments, Americans with Disability Act, and even Division of Housing, the state of Colorado. We have our own accessibility laws too. And also digital accessibility. There's federal mandates for everyone across the country to start making digital resources more accessible. Um, so yeah, so preparedness. So I think as you think about staying where you want it, like staying in place and living where you really want to live, there's some things to think about while you prepare. I think redefining social and family frameworks, and even though families are staying closer together, I think really it comes down to your natural supports because people come and go in your lives, and especially, I found as I'm getting older, like the people that I've always been in my life that I always thought would be there aren't there. So I think identifying natural supports, like who's in your life that can really help with, your transportation, teach them about like your health needs so they can support you and to live, your the best life that you can live. Health is health and safety planning, things like, your MDPOA, like your medical power of attorney. Think about, who might be a good person to fill that role if need be. Things like assistive devices as your mobility is changing. And in a couple of weeks, my colleague Kim will be talking a little bit about assistive devices and how that plays into home modification. Um, yeah, and then even things like adapting your environment. And you don't have to modify your home to support living there for as long as you can. So things like moving to the main floor of your home, that's just adapting to your environment, changing lighting if you do have vision difficulties, moving carpeting, so if you are in a wheelchair or you use a walker, that moving carpeting could be huge for you as far as getting around easily. And they make, things like accessible appliances where, like, bigger knobs, bigger numbers on them. And also things like elopement preparedness. I just wanted to note that just because, dementia and neurocognitive disorders there's a lot of preparedness that needs to really go into that. So, and there's things that you can do in your environment to ensure that your loved one is safe in their home. And if you take some safeguards to prevent elopement. So making your home more accessible. And I think that's a big part of today, these last two points. Home modification, grab bars, railings in your home, modifying your bathroom like a walk-in shower, roll-in, or, widening doorways, things like ramps, accessible cabinetry. These are all home modifications that you can have done to make your home more livable. Yeah, so that's kind of a little bit about home modifications. And again, Kim will be going in more in depth in a couple of weeks on that. Kind of tied to that is financial planning. Just because as we do get older and retiring, fixed income, there's debt management, and especially if you talk about needing your home modified, how are you going to pay for that? So that's a big part of living in place, aging in place. So that I'm going to move on to funding home modification projects. So just as a disclaimer, I'm not a financial specialist. I'm a social worker. That's what my career has been. So, but my goal is to really equip you with basic tools necessary to start kind of sorting out the logistics of making your home more accessible. So I can't really provide financial counseling. I wish I could, but that's just not really my role. So this is just an overview of basic funding mechanisms. And I know as we get into this, some other funding options that you may not be familiar with. So just so to start, these are your standard funding options. So personal loan, it's those are the most common things that you'll really see. I mean, I get how many emails and junk mail do I get about personal loans? But yeah. So they're very similar to your credit card rates. 6 to 31%. It's a pretty wide range of the APRs on that. But yeah, so the full amount would be available upon approval. Just one thing to consider is that hard inquiries are made for when you do apply for a personal loan. So like shopping for one, I would suggest being more targeted about those choices that you make for acquiring. Home improvement loans, those are very similar to personal loans, but they have that specific purpose of improving your home. So for like a loan like this, a lender they would probably want to see like your bid, like the invoice from a contractor that you choose, just so they can see how much this is actually going to cost and give you that loan relative to that. Certificate secured, these are probably some of the best interest that you're going to get, only because it's the way it's set up. So it's like a credit union loan is kind of what it's called. So in when you with a certificate secured loan, you actually you have a certificate of deposit, and that kind of acts as collateral to the loan that you want to take out. So the CD itself collects interest as you're paying back this loan. So that kind of helps offset the interest, long term. So the loans, they could be less than what the CD is, they could be the same, or they could be more. Mortgage, I think that's like everybody kind of knows what that is, but it's a loan based upon equity. The equity is the value of your home. 6% fixed rate for a 15-year mortgage. That's actually stayed pretty stable since over the past year. So home equity line of credit, that's kind of the second mortgage people may refer to it as. So it's a loan based upon the available equity of your home. So if you have a mortgage taken out, whatever's left in that could be on the home equity line of credit. And then last, I'm going to go into a little bit more in depth is the home equity conversion mortgage, which is 7.5 to 10%. So these are a little bit more involved, and I think some people get misinformation on these. So I just wanted to give a little bit more in depth, just kind of info on it. So yeah, so for a home equity conversion mortgage, you do need to be 62 or older. You do need to live at that residence. That's a requirement. Either low or no balance on your mortgage, have a sustainable income. They actually do require that HUD requires that you have a financial counseling session before you actually take out that loan, and that your home is in sufficient condition. So there's quite a bit of nuances to this. So yeah, so just the things to think about, like the fees and interest, that could decrease the actual equity on your home given the size of the loan. There are risks, things like risks of overvaluation. So say if you take out the loan and your home is worth $500,000 at the time, the market crashes, it's only worth two. If you go to sell your home, you would owe on the 500,000, which could make it very hard to actually sell your home if you do need to move or go somewhere else. So there's also risk of default. So like I was saying, you do need a sustainable income because they require that you pay your taxes, insurance, and any like homeowners association fees that you're required to pay. And they will know if you don't make those payments, and that could be a risk of default. And also, with the home being insufficient, the home needs to be in sufficient condition. So they do periodic inspections at random. So if your home needs a lot of work, that actually also considers as default on the home equity conversion mortgage. So there's quite a bit to think about. I mean, and also, so like the balances due at either at passing or sale. So if you do pass and there's other people living in the home, they are possibly looking at homelessness. So I mean, that's a very serious consideration. When you think about these home equity conversion mortgages, some of them do have stipulations for your spouse, but I mean, again, that's from loan to loan, lender to lender. So I can't really give too much insight on that. So yeah, so moving on. So the Housing and Urban Development, they have what's called the Title I Property Improvement Loan Program. They also have a manufactured home loan program, but I'm not really go into that. I don't really have much information on that because that's specific to manufactured homes. So this is, I mean, so we're thinking about, how do you modify your home? How do you improve your home to kind of stay where you want to be? So that's why I'm going to focus on this. Yeah, so it's single family, multifamily, or even manufactured structures would qualify for this. I think there's really good coverage on it. So it could be, restoration, rehab, or multifamily home conversion, or new non-residential structures. And I mean, I know, like, think about multifamily home conversion. Just talk about living in place. If being close to your family, maybe that would be a great option to get more support in your home if you do need to, if people do need to be closer to you. So it's a fixed rate and there's no prepayment penalty. Then it's the market rate based upon your local market. So it's probably around what the rate for a mortgage would be. So, so next, there's a USDA Rural Development Loan Program. So you do need to be the owner occupant, unable to obtain credit elsewhere, be under the very low income limit in your area, and actually live in a rural area. So when you need to determine those things, actually USDA has a link for you to look up the HUD guidelines for what the income limits are. And also, if you go right on the USDA website for this loan program, you can put your address in. It'll tell you yes, no, like on the map. Will you qualify? Do you live in a qualifying area? So yeah, I mean, so it does, like, for as far as the income limits go, it does vary from county to county, but I would say the majority of the state, 33,000 income is for one person family, 37,700 for two person, and 42 for a 3-person home. So yes, to repair, improve, or modernize your home, or remove health and safety hazards. So home modification would obviously qualify for this loan. It's a 1% rate, 20-year term, up to $40,000. So yeah, so those are probably the most, your most common funding options. And I think as far as outside of grant programs, I think these are some other programs that might a little bit more tailored to your needs if you have different financial difficulties. So as far as our state programs, I'm going to introduce my colleague Bailey Hickey from the Office of Housing Finance and Sustainability. Bailey has been with the Department of Local Affairs for about 3 years and has been in pre-management real estate for about 10. So Bailey, I'm going to hand it over to you.
Cool. Thanks, Brian. And thank you all for giving me some time to chat a little bit about some of the cool home ownership programs that I am a part of. So like Brian said, my name is Bailey, and my position here with the Division of Housing is as the home ownership team lead. And within the Division of Housing, we have the Office of Housing Finance and Sustainability, which we lovingly refer to as OFIS. So if I slip up and call it OFIS, that is what I'm referring to. A lot of acronyms in the housing world. So Brian's going to dig in a little bit deeper about, his specific programs that we're providing with Division of Housing, but also understanding that there's multiple prongs to the, affordable home ownership or affordable housing world. And so one of the additional things that Division of Housing does is we provide funding in many ways, but a couple of those programs include support to single family owner occupied rehabilitation and our down payment assistance programs. So just to be clear, we're not directly reviewing applications, working with clients on eligibility. We kind of are a step removed from that. And my role within the team is an asset manager. So I'm making sure dollars are getting to the programs and that they're providing those funds appropriately to individuals like yourself. So greater detail in the next slides, but just to get us kicked off, these programs aren't available all over the state yet. More information to kind of come on that, but just to know, not statewide, and I'll get into a little bit more about that. So because the single family owner occupied rehab program, again, lovingly referred to as SFOO, can potentially pair well with the program that Brian's going to chat a little bit about. Wanted to chat about this first. So the program exists in the form of a loan. Each agency runs the program to their own terms. within our DOH or Division of Housing provided guardrails. So your income and expenses would be reviewed by the agency to determine your eligibility and the terms of the loan. For some of you thinking, I couldn't possibly take on another monthly bill, that is just not in the realm of possibilities. Some agencies do provide that deferred loan, which means that it would be due, if you sell your home, if you move, things like that. So there's different loan options, some of them including 0% interest and up to 30-year payment options. Exciting, comparison to the previous kind of statistics. Those, loan interest rates are pretty low compared to the others. So while it is a loan, it does have more benefit than maybe a traditional, rehabilitation loan would. Next slide for me, please, Brian. So how do you find out about what services exist in your area? So this is just a quick screen grab from our revolving loan fund webpage, and it's linked there at the bottom of the slide for you. And Barbara, thank you for sending out those links. So it's also in that tab. And you'll see the term revolving loan fund used for these programs. The reason for that is because the loans you're taking out from these agencies are going to be repaid back, like we discussed. You're either paying it monthly or paying it when your home is for sale or you move, etc. And what happens is with those dollars, they come back to the agency, and then they're able to continue using those dollars to support your local community using the same purpose. So you're paying off a rehabilitation loan, fantastic. That means somebody coming up next can also use those dollars. So very exciting, rotation of funds. And then on this page, sorry, I'll have you go back. On this page, the easiest way to go about searching, you can either search down payment assistance or DPA or SFOO, which down payment assistance or single family owner occupied rehab. That's one tactic. The other tactic would be to search directly for the county you live in. So those are kind of a couple ways to go about that. There are nuances with these programs. So really just picking up the phone or emailing these agencies that are listed and figuring out, do you truly qualify? What services or what service areas do they truly cover? Very nuanced. So just, digging in, I know it's a little bit of work on the front end, but if you are able to find an agency that serves your area, fantastic. And the other piece to that is new programs coming online all the time. So, 6 months, this table could look different. A year from now, it absolutely will look different. And just to keep in mind, it's not a perfect table. We are humans and are, updating it as often as we can as these service areas change and as new agencies come online. So that's the best resource we have right now. Stay tuned. If you need services in a year or two from now, the table could look totally different. Next slide for me, please. All right, a few additional things I'd like to touch on. So as I've discussed, these rehabilitation programs are in the form of a loan. And that's, again, how the dollars can continue being used for years to come. However, a lot of individuals could certainly benefit from a grant program for emergency repairs. And so this is a new program rolling out where households may receive a grant for emergency repairs. This is based on your income and your need. And as a reminder, not all rehab agencies will have this option. It's brand new. It'll take some time to get implemented, but it's one of the exciting things that we're truly rolling out kind of as we speak. And like I touched on earlier, my team / Division of Housing also provides down payment assistance. And so it's important to remember, like I said, getting folks into affordable housing or remaining in housing is, multiple tools in the tool belt, right? And so this is another one. So in a nutshell, if you're not familiar with down payment assistance, people can receive a loan to assist with the down payment of a home. If you or someone is interested into getting into affordable home ownership, this resource may be another layer to the funding that's being brought to the table. And then just very quickly, we're able to provide these programs because of Proposition 123. Some of you may remember it being on the ballot a couple of years ago and it passed. So this is an exciting funding source for us because we receive an allocation annually and intend to implement not only the programs we're currently running, rehabilitation, down payment assistance, but also potentially new programs that, we see a need and are able to meet it. So it's a very exciting opportunity for us. And if for any reason you've heard through the grapevine, that your local area has not opted into Prop 123, you'll want to contact your local representative to reflect the housing needs of your community. And I'm pretty sure Yes, it's linked on that slide there. The Proposition 123 page is also a slew of information. If you want to like dig into that, kind of government legislative side, or if you just want to decide, is my area opted in? How can I advocate for affordable housing in my area? That's a great resource for you. So just to kind of wrap up as a reminder, I'm not directly providing these services. I'm the person who kind of gets the money to those providing that direct service. So that website's going to be your best starting point for finding out, resources in your area. And I believe that's all I have. So kicking it back to you, Brian.
Thank you, Bailey. That was great. All right, so moving on. Okay, so as I mentioned before, I oversee the Home Modification Tax Credit program that's available to Coloradans. So yeah, I'm just going to go into give you an overview of the program, just kind of what the application process looks like. Yeah, so that's that. Yeah, so okay, so this actually started in 2019. So House Bill 18-1267 was passed on the income tax credit for retrofitting home for health reasons. So that's where the home modification tax credit program started. House Bill 19-1135, the eligibility was expanded to include dependents. So your child, or if you have a lifetime dependent that you claim on your taxes, they could also qualify. An applicant could qualify to for the tax credit. And then in 2023 was renewed under Senate Bill 23-196. So it was renewed, and actually the usability for the credit used to be 5 years, and now we've expanded it to 8 years. So yeah, so it's a state income tax credit. It's up to $5,000 per eligible household member. So everybody in the household, as long as they have needs, accessibility need, and they qualify, they could apply as well. And it's a non-refundable credit, which I'll go into what non-refundable means a little later on once we talk about the actual certificate and how to use it. Yeah, so who qualifies? So one, you have to be a Colorado state taxpayer because it's a tax credit. So obviously, if you don't pay taxes, you got nothing coming back to you. So you're under the household income limit. So that's the AGI, adjusted gross income for the whole household. So a documented disability or diagnosis, a demonstrated need related to that disability, and you're either the homeowner or landlord has authorized the home modification that you're applying for that tax credit. So the application process, it's a 3-step process. We have a pre-qualification, initial application, and final application. So, and we prefer that we go through this process just because as I said before, a lot of people, they want these home modification projects, but they don't necessarily understand the process involved, and kind of, because it really could be a lot. I think any contracting, any home improvement project is a lot. So when you follow our process, I think it helps ensure that you're going into this educated and you're making the right decisions and you're looking at the best resources possible. So, so that's kind of like how the application process is set up. So qualification. So you need to verify that funding is available for the year that the home mod was completed. Determine your income eligibility, and then take our survey. So yeah, so here is the income limits. I've just kind of put this into a slide so you can kind of see. So 2019, 150,000 is the household income limit. All the way to 2024, the current limit is 182,191. So again, that's the aggregate of the adjusted gross income for all household members, even if regardless of their disability status. So funding availability, as you can see, we have quite a bit of funding that's still available for every year. So we're really, I think one part of like my outreach is really just to get people who maybe have had these projects already done that didn't know about the program or didn't think they qualified. They can get an application in, and as long as everything checks out, they could still qualify for that tax credit. So lots of money to give away still, folks. So yeah. So next is the pre-qualification survey. It literally takes 3 minutes to complete. We just need your name, telephone, address. If you have someone helping you with the application, what's their phone and email, and then yes, no qualification questions. So basically, it's everything we need to know about you. Do you or do you not? So it's pretty basic and it's pretty quick. So if you do qualify, we send you instructions on the next steps, just some different documents to maybe help with planning. And then after that, within about a business day, we'll get your account activated because we do have an application portal. It's all done online. It's pretty straightforward. So that's a pre-qualification. So next step is the initial application. So it's gather documentation, determine your scope of work, and obtain project approval. So like I was saying, that pre-qualification, yes, no questions about our program and whether or not you qualify. The initial application, that's all about, we need to see the documentation that supports that you do actually qualify. So, we need to see a letter of medical necessity from qualified healthcare provider. I mean, we're not really looking for in-depth, your whole medical history or anything, just that you have such and such, condition or mobility need that requires X, Y, Z home modification. So, say if you use you want to use a roll and shower chair, you want, so that would be a part of what the letter of medical necessity would include. Income verification. So we need to see the state taxes for everyone in the household, just to make sure you're under that limit. So either property tax documentation, just to confirm that that is your residence, or lease information. If you don't have an actual lease, then, we just need a letter from the homeowner. But in addition to the lease information, we do need a letter from the landlord just saying that they consent to that home modification. And then before photos that's another qualification. But with that said, I think when we talk about retroactive applications, people have already had the work done. I mean, you can't go back and get before photos. So I mean, I just reach out to me. We can talk about it, talk about your situation, see if we can make an exception. So if you don't have photos, don't think that disqualifies you immediately. Yeah, so also with that, we need to see the scope of work. We just need to see that the bid from their contractor, that it meets those medical recommendations. They need to see an itemized bid, what that work is, what materials and labor costs would be, your projected completion date. And then we just ask that you verify licensing and permitting. A lot of contractors try to avoid getting permits, and it's really in your best interest to do your research, because I mean, every locality has different requirements. I mean, we do have some statewide requirements, but things could vary based upon where you live. So, and we also do require that they are a licensed contractor to get the credit. So we just ask that you verify that stuff ahead as well. So you get all that together, you submit it to us through the application portal. It's about 5 business days from us receiving it that we'll review it. So really, I mean, it's pretty simple. We just verify that the eligibility documents, review that scope of work just to make sure that everything looks good. And then we just determine the projected credit. So I mean, the credit is up to $5,000. So say if your project is only $3,000, the credit would only be good for $3,000. But if it's a $20,000 credit, that the $5,000 would really be that would be the maximum. So once we review, it's either approved, incomplete, or denied. Approved, obviously, we say, you got the green light on this. You can, proceed with that project. It's incomplete, it means we're just missing some information, or we might have additional questions. Or denied means you don't qualify for the program. So, I mean, some of those reasons, I mean, there's no accessibility need. New construction does not qualify. Appliances or furnishings or generators wouldn't qualify for the credit. Medical equipment, and then also, I mean, in the income limit, we do get a number of applicants that they're over the limit, but they'll still give it a shot. I don't know why, but that's so. We do check your income. Long story short. So, yeah, so final application. So like I was saying, we have this 3-step process. And I think going back to the overarching framework of our webinar series, I think it kind of does fall in line with this tax credit program, because we want to make sure that the work that you're getting done does meet your needs, and that it is going to make your home more accessible, and that you're not getting, taken advantage of by anyone, So, that's why we really do ask that you kind of follow our process. But if not, it is what it is. We just can't guarantee that you would get approved, even if you had a walk-in shower installed and you haven't done didn't follow all those steps outright. So, yeah. So the final step, it's even easier than all the other steps. We just need to see receipts paid in full, an invoice from the contractor, and we just need to see any changes in the scope of work. Permits, if permits were required, we just need to see that it's a past inspection. And I would say things like, if you want a walk-in tub with jets installed, you would definitely need an electrical permit, because that requires a dedicated line. So that kind of stuff, we really do need to see that, all the processes have been followed, and after photos. I mean, that's kind of a hard requirement after, because obviously if you had it done, we need to see that it was done. So, I just some additional considerations, just report any changes as soon as you can, just in case if something does change and maybe it doesn't really qualify for this anymore. We just to communicate with us about it. So, an inspection may be required, just to verify that the work was actually completed. Or even at your request, I've had people, they said, I don't want to pay this contractor until, you take a look at it. So, I mean, that's something we can offer you too, if that really is something that, that you want to have done. And if you are denied at any step of the process, can be appealed. We do have an appeal process. And also, I just want to know, a warranty isn't required, but it's highly recommended, just to make sure that your investment, you have something to back up your investment in longer term. Yeah, so the certification process. So once the application is approved, the final application, we issue a certificate, and basically that would be submitted to the Department of Revenue with with your taxes when you go to file. As I said before, this is a non-refundable credit. So non-refundable credit is just the way it works. It's relative to your tax liability. So, I mean, obviously you must file your taxes. So say if we give say if you get the full credit for $5,000 and you've only paid $1,000 in taxes, you'd only get $1,000 back on that tax when you use this certificate. But as I was saying, I guess I can get into, on my next slide, I'll get into the specifics of the actual tax credit. But a refundable credit, that's, you're a taxpayer. But for a refundable credit, you would just get the whole amount back, but that's not what this program is. So, and also just want to note, you would have to pay up front for these projects. We don't give out any amount until we can verify that the work is actually being completed. So, so like I said, you submit it with your taxes. It's that non-refundable credit. It's good for up to 8 years. So if you get work done this year, you could use it for for the 2024 filing year. And if you only get $1,000 back from this tax credit, you had a $5,000 credit, you still have $4,000 that you can apply for the next 7 years. And you can file an amended return. So if you had the work done already, you could go back 4 years to get that tax credit. So if you had a big project done and but you don't pay too much from year to year in your taxes, that's a really good strategy, I would say. And actually, the Department of Revenue, they strongly prefer that you do amended returns, just because of the way the funding works. And we get $1 million every year. If we're not doing the amended returns, it kind of screws up what that looks like on their end. So, when you're filing it, it's the form DR 0104CR. It's the individual credit schedule. And the line item, the actual number could change from year to year, but the name of it doesn't. So, it's called retrofitting a residence to increase a residence's visitability credit. So yeah, it's quite a mouthful. They won't budge on changing that. So I don't know, but that's a home mod tax credit line item when you go to file your taxes. So any questions about the program or anything before we move on, or do we have anything in the chat, or am I just
there's nothing in the chat room. I have a question.
Okay, sure. Maybe I have an answer. Yeah.
So, you gave us a lot of information in a very short period of time. Does your division of housing have someone, is it you or someone else, that could sit down with a person or be on the phone with them and really get into the nuts and bolts of some of those different loan programs, the tax credit, the revolving loan, going to, I guess, banks for other loans to determine what really would be the best fit for that person?
So I mean, again, like I was saying, like as far as like financial advice, like I'm a social worker. I mean, my coworkers are, Kim, she's been an occupational therapist for many years, and we have specialists in construction. So as far as like my team and what we do, like we're not really in a position to give financial advice to that extent. But I think your point is a very good point, and I think mean, long term, that might be something that would really benefit the state. And that's something I think, I think home modification is on the governor's radar. It's what we call a wildly important goal this year for him, actually. So I think these are actually sort of I think what you said is actually a great starting point, for that we can have more conversations, in the future, just to find out what people's needs are and how the state can really support them. So short answer, no, we don't have financial advice. But I think the longer answer for me, as far as like the projects go, I mean, I'd be always happy to provide support, answer questions about the project and really what you want to do. And like we're going to move on to some funding resources, for like some subsidized resources. But for folks that, they might not be able to pay for it, we can maybe have a conversation. I mean, what I'm going to go over today isn't an exhaustive list. For time and all that, we're kind of getting close as it is. So some of the more local programs, I do know of a few that can maybe help. Yeah, so I mean, but I'm always willing to help talk through what people's needs are, what things to consider. I mean, for one example, I mean, the person, she didn't qualify for any subsidized programming. It's like she's made too much money to qualify, but she really was in a bad position. She can't really pay for this stuff. So talked about some different resources. I mean, she wanted a walk-in shower, couldn't get that paid for, but we connected her to a resource for to have like a tub cut installed, which is kind of you're making a cut into your tub, so you can walk and step in and out, so you're not stepping over the whole tub. She had some other work done. She only paid like $1,000 or something. I mean, she qualified for the credit, but she's like, you know what? Like, I got what I needed. You really helped me out a lot. I don't want to do this credit. I'm like, all right, well, I don't know why you don't want to do that, but I mean, but for me, that's still a victory. I feel like if you don't qualify for the credit, or for whatever reason you can't benefit from this tax credit, we're still here to help you, because it's such a confusing process. And we didn't really mention it, but my team, like I work on the home modification team, and Naomi will be here in 4 weeks. She's kind of the lead on that. We oversee Medicaid projects, and it's just it's a lot for people. And I just imagine folks on Medicaid that are getting these projects done, it would be really hard for them to pay for it, and even just to get through this process, given what people on Medicaid have disabilities, most of them. So it's a very confusing process. So I mean, disability, no disability, for as far as intellectual or something, if you've been having a hard time with that, I'm always willing to help, point you in the right direction. So
We have another question. What happens to the money if it's not distributed to the homeowners?
That's why I
go through. If you have excess money after the period of time, I think your chart said 2019, you can still apply, or 2018. What happens to that money if you don't have applications for it and it's not used?
Well, I mean, I think that's at the end of the lifetime of the program. It would go back to like the general fund for the state. So, and that's why I'm here today to really encourage people. If you've already had work done, apply for it, because it's it's a shame that people haven't utilized this program. And so, yeah, it's so like, and the credit is issued based upon the year the work was completed. So if you had the work done in 2019, that's still like that funding is still available for you. So, and that's where I think my objective right now is to get the word out about this program and let people know, like, you can still apply for this. There's a time in our guidelines that wasn't really encouraged, but now, I mean, encourage, because it's money lost otherwise. So, yeah. And I had an application last year, 2019, they applied. Like, all right, go for it.
Do we have any other questions from the attendees? My goodness. I did see a note. Rick, do you want to mention yourself? Rick Martin?
Sure. I'll just say I'm a CPA, and I give tax and financial planning advice. So if they need help or have a question, if they qualify for these deductions, credits, and so forth, then just let me know. I'm here to help. I don't charge for my services up front nor on the back end. So I'm kind of almost a free resource if you need me. Thanks.
And I would mention you can find Rick on the AgeWise website. For those of you who came in just a couple minutes late, we are recording this webinar. It will be on our website as soon as we do some minor editing to get out any glitches. We would ask that you just take, I'm sure it'll be 30 seconds or less. And if you haven't noted your city in the chat box, that you would do so we can know the range of communities we're reaching with this webinar. And with that, if there's nothing else, questions going once, twice. I really want to thank you, Brian.
Oh, I'm not done yet.
Oh, I'm sorry.
Yeah. I'm
Good.
still presenting, right?
We got a lot of time.
Have I not been presenting? What? Or did you unshare me?
No, you're
I
still
can still see it,
sharing.
Brian.
Okay. Why can't I? All right, man. All right, now I'm flubbing around with technology.
Oh,
Okay,
great.
here we go. All right, cool.
Yeah, because we've got not quite 15.
Okay. Yeah. So, all right, sorry. Yeah, my little hiccup there. Yeah, maybe can we edit that out of the?
Yeah, that's
No, I don't
everything we
care.
do.
Whatever. Okay, all right. So identifying need, finding resources. So this next section, you loan just doesn't really seem like it's feasible for you. It's not possible, but you still need some kind of support. Just going to give an overview of some of I think the programs that are more widely available to folks in the state of Colorado, just to point you in the right direction so it's like, hey, maybe I can qualify for some kind of grant funding and I can pay some of it. I can utilize the tax credit program. And then, you might have to pay a little bit up front, but hey, if the tax credit comes in, with support from the grant, you're not really necessarily paying for it long term, So that's just one strategy that I strongly recommend for anyone. And I think just before I go into these, any kind of like subsidized support like this, I think finding it and getting approved for it could take a while. It's not like a lender that's really eager to, start, with giving you a loan. So it could take a while. So I think as far as like your planning, I think start up front with this stuff, before you even start reaching out to contractors, say, hey, like, what are some things that I can maybe pursue to get what I need to really limit the out-of-pocket costs for me. So yeah, so that I'll move on. Okay, so first one. The VA, U.S. Department of Veterans Affairs grant programs. If you are a veteran and you do have a service-related disability, this is like I go to this as soon as humanly possible because it's quite a big grant. I mean, it's up to $117,000 for fiscal year 24-25. So it covers, you can to buy, build, or modify your permanent home. So if you do want to build a home, they'll help you with that. Eligibility, so the veteran would need to be the homeowner with a qualifying service-connected disability. They do have a distinction that people with loss of limb, they only accept 120 veterans per fiscal year. That's October through September is their fiscal year. So they also have the special home adaptation grant, which is up to 23,444 for fiscal year 24-25. And it's the similar qualifications, but you don't necessarily have to be the homeowner. You just have to prove that you live in that home. So that's the VA's grant programs. So as I mentioned, the USDA, they have that loan program, but they also have a grant program. So anybody 62 or older, you still need to qualify for the loan program, but it only addresses health and safety hazards, and it's up to $10,000. So those are just a couple federal programs that I'm aware of. In the state, I'm just going to go into probably some of the bigger providers that do stuff around the state. Or, I mean, I think we do have a lot in the Denver area. So like Home Builders Foundation, it's variable, and a lot of that is variable because of the income limits. So the residency requirements, it's the 8-county Denver area. Yeah, so it's Adams, Arapahoe, Boulder, Broomfield, Douglas, Elbert, Jefferson, and then Denver. And it's only a home modification program. So if you do need extra work done on your house that doesn't qualify as a home mod, they might not be able to help, but it's worth giving them a call and just seeing what they can help with, So rebuilding together. So you need to be the homeowner and qualify under the low income limit. You need to be age 60 years or above, a veteran, someone living with a disability, or a caregiver of somebody with a disability. So it's a 5-county Denver metro area. So it's all the counties connected to like contiguous Denver, and El Paso County as well. They have a safe at home program, that's like their home modification program that they offer. They offer emergency repairs as well too, and that actually has a 24-hour turnaround for a response from them actually. So if you have like a major utility concern, something that's happened, Rebuilding Together may be able to help. They also have rebuilding days too. That's for houses that need a lot of work. It's for volunteers. They don't do too many of those from year to year, and that goes far beyond home modification. But I'm just letting you know that is something that they offer too. So if you need a lot of work done, I mean, that Rebuilding Together might be an option for you. So Habitat for Humanity. This is a very big. It's a national agency, but they have 23 locations statewide. And in the links that were sent out, that was to their search. Like you can go on a map, find out where's the closest Habitat for Humanity. So they offer minor home repairs. They also have a home modification program. They also have what's called like a Housing Plus model, which is, I think it's like a wraparound case management program. So it's to help, think about, financial planning, health planning. I think all those things that I was kind of talking about to support living in place. Habitat for Humanity, they have a program to kind of help you kind of think through some of those things. So last, Brothers Redevelopment. I'm not going to give any information because they're going to be joining us in 4 weeks to give a presentation on what they do. So, but they have programs all around the state. And their programs vary significantly as far as available funding and their wait list. So I think someone from Brothers could definitely speak to that better than anybody at the Division of Housing. So that's October 9th, and that's the third part of our webinar series. We'll be talking about just the nuts and bolts of the construction phase and the home modification phase, the construction phase of a home modification project. Sorry. So, all right. Well, that's all I got. So thank you for your time, everyone. Any questions or?
Sorry, I had to get myself unmuted. I hope you'll all come back and join us for the other 2 sessions. Again, this is a lot of information. You can watch it online. And the link will be noted in our newsletter. And you can probably just share your newsletter with other friends that might need to know this very valuable information. And good job. I agree, Naomi. Thank you. Does anyone last chance for questions? Thank you so much, Brian and Bailey. We really appreciate it. Kim, we look forward to hearing from you next time on adaptive equipment that can go into the home so people can age in place. And again, that is on 9/25, same time, same place. You do have to register. And we'll see you then, I hope. Thank you, everyone, so very much for being with us.